President Trump is going ahead with its 25% tariffs on steel and aluminum. That has an impact on the Canadian dollar. Why? Because the U.S. is a big importer of steel from Canada. So even though Trump gave a 30-day reprieve on tariffs to Canada because of this blanket steel tariff, the tariffs are going through in effect anyway. That should weaken the Canadian dollar, but what we're seeing here is a strengthening of the Canadian dollar in early U.S. trading. So I'll talk about the technicals that are driving this currency pair. Perhaps they're in play, so let's get started. Well, the price in the dollar versus Canada moved above its 100-hour moving average in the Asian session after falling below it in the late U.S. or the U.S./North American session yesterday. That moved back above, tilted the bias more to the upside, and the news of the tariffs, however, did not propel the market any further than near this 1.4348 level. That level roughly corresponds with a swing area. You can see how the price, maybe found some resistance sellers through here. We had some resistance sellers through here. We had some support buyers through here. And moving forward, we had some resistance sellers here, some sellers here. We tried to stay above it through here and then fell below it here and here. And trading yesterday, the price moved above and below that level. And trading today, we reestablished the level. We couldn't get above that level. And we started to see some sellers push the price down in the early North American session, despite those tariffs. Another level on the upside that we should pay attention to that the price could not get to is this level up here at 1.4368 level. That level corresponds with the swing lows through here, and here. Broke below that level, used it as a resistance here, and here, and maybe even here in trading yesterday. But that is a progression to the upside. Get above this level, get above this level. It's more bullish. Couldn't do it. Started to rotate back to the downside. We are back down toward the 100-hour moving average, which is going sideways. That's indicative of a market that is unsure of which directional bias it wants to go. We could put a little red box around the up and down trading range here. On the downside, we have this swing area here, and it goes back further in time, back through here, where there are other swing levels are within this area here, but between 1.4290 and 1.4304 it needs to be broken on the downside to increase the bearish bias. And then we have this area down here, which again has other levels going back in time, where we found a nice floor here developing between the 1.4260 to 1.4269. So in between that sits a 100-hour moving average. That's going to be the barometer for traders today. Stay above it. It's more bullish. Move below it with a little bit more momentum. Look toward the lower swing areas. We'll see how this plays out, but the market's so far taking the tariffs in stride, and honestly having the Canadian dollar get stronger in the process. Go figure. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.